Welcome to the Open Mic Podcast Show with Mike Midgley.
Hey, and welcome to the Open Mic Podcast Show. And in today's episode, we'll be discussing the awesome topic of blockchain and fintech. Now, I get asked a lot when I'm doing business growth strategies, quite a lot about, I've heard of Bitcoin and cryptocurrencies. However, not a lot of people, are sure about the technology that drives behind it and obviously what blockchain is. They think it's just Bitcoin, or is it something else? And, I'm not an expert either, but I'm certainly joined by a couple of sort of market leaders here. It has been around a little bit longer than a lot of people think as blockchain. And, Satoshi Nakamoto released a paper, I think it was end of 2008, beginning of 2009, when he started putting on the forums and started doing the sort of Q&As when he was releasing it as open source. So it has been around a little bit longer, but it's a lot wider used than just cryptocurrency. And in this episode, I'm really privileged and excited to be joined on the show, as I say, by Joseph Snyder, the president and CEO of Lannister Holdings, and Chris Brown, the chief technology officer. And Lannister's a publicly traded blockchain technology leader based in Arizona in Phoenix, in the US. So welcome to the show, Joseph. Welcome to the show, Chris. And thanks for taking the time from your schedule to join us today and sharing your expertise. How are you guys?
Fantastic. Thanks so much for having us.
It's an absolute pleasure. And Chris, thanks for joining us too.
Yeah, thanks for having us.
It's an absolute pleasure. So I don't want to sort of build Joe and Chris up too much. They can do themselves far more justice than I can. But certainly it's fantastic to have you two guys on the show. As I say, the topic of blockchain and fintech is fascinating, and one with so much opportunity, not just over cryptocurrencies. And obviously Joseph and Chris's pedigree is a pretty serial entrepreneur, building, growing, exiting businesses, angel investors, tech, real estate, and it goes on. But without further ado, as I say, I didn't want to steal the light, guys. I'd much rather you just introduce for the podcast show. Tell us a little bit about yourselves, and you guys share a little bit about your journey, background, and let's just sort of get a feel of where you guys are.
I don't know. I feel like you were doing a good job. I mean, Chris, what do you think? We just have let him talk about us for an hour.
Yeah, that works for me.
I'm sure you guys can do a lot better than that.
Well, I appreciate the intro. I'm Joseph Snyder, CEO of Lannister Holdings and Lannister Development. Chris and I are brothers, first of all, so we go way back. And we've built and played with and scaled and exited multiple investments and companies and things over the years. And we always kind of circled back to looking for things that are really transformational, pushing the edges of what is currently feasible, and also looking at pushing the edges of what is scalable and growable for we do this because we love what we do and we love the adventure, but we also do this to generate wealth, right? Wealth for our families, wealth for our stakeholders, and we're not a nonprofit. So, so that definitely plays into it. But, we have a deep background in traditional business, highly regulated businesses. Chris and I built a risk management business through mergers and acquisitions from a little single office startup to operating in 32 states when we exited it a few years ago. And, that experience gave us a very deep well of knowledge and connection in the mergers and acquisition space. How do you identify merger targets? How do you, put those deal structures together? How do you finance those deals? But also it gave us a really clear understanding of how large organizations and fintech companies and insurtech companies and insurance companies and finance companies that use those companies, how they make decisions throughout their deployment and purchasing and go-to-market cycles, and also how they are regulated and what those regulators are looking for when they're approving new technologies and allowing things to get tested.
So
right?
It's a great insight, and you've had that journey through there.
Yeah, and so we've had that journey through there, and that really has been a the core foundation of what we ideated when we crafted the Lannister strategy. Lannister was specifically designed and built and created by Chris and myself and Cynthia to go to market, to do a reverse merger and go public, and to take the next generation of financial and insurance and logistics technologies to market as a service and also as product offerings.
Absolutely.
And so it's been a really interesting journey. And with that, I'll let Chris talk a little bit about us too.
Yeah, that's great. So thank you for that introduction. And over to you, Chris.
Man, you guys are just both doing a great job. I was happy there for a bit. Yeah, I mean, it's been a long journey. There's a lot of pieces that have come together over many, many years for us to be where we are, right? It's not just like, hey, let's be a public company and see how it goes.
And all the external pressures that come with that as well.
Yeah, it's not just, it's not the easiest thing in the world.
No, I understand.
But it's an interesting place to be, especially for us and for me as a nerd, essentially. Playing with the newest technologies, seeing what's out there, seeing what's coming, looking at the companies that are starting to come up and looking for, acquisition targets that will fit within the space of the company that we're building and add to the power of our team and our development team specifically. It's a really exciting time to be doing something like this.
No, that's amazing. And I think that, obviously from my journey here in the UK, going all the way back to 2003, 4, we bought a company and then we became a non-quoted PLC to start with and then grew up and raised venture capital. And then you suddenly get, I was always told by my non-exec at the time and my chairman, who was ex-Wix and Barnes and Noble as well, in my non-executive, FTSE 250 chairman in the UK, who came in. And he said, when you're working in a private sector business, he says, you can go and dig holes in your own garden as much as you want. As soon as you go public, it's like jumping over your neighbour's fence and digging holes in their garden. And sometimes people object and things like that. So I'm not sure if that's some of the journeys you've had. And and it doesn't mean that I appreciate the regulated. I was in a finance business. We were a wheeled asset finance. Like we used to lease vehicles, cars, vans, trucks, buses, in that type of background. And so highly regulated, so I can see a lot of technology. Yeah. And I remember going back to 2003 when we had this first online quote system, and we could calculate rate books for car leases back in 2003, and we were a market leader. And as we went forward, so I share that journey with you, Chris, as well. And I certainly miss it. But coming out into the smaller agency, smaller consulting things, I like to go in and see that objective stuff. But I do miss the hustle and bustle of that market. But credit to you guys. I know how tough it is, and sometimes people looking from the outside, don't they, and say, oh, it must be great for you guys. Look how successful you are. But they don't always see the knocks that you have to take and the risks that you have to take. And, so it's certainly been a challenge. But thanks, Chris and Josie, for that. I can see that, especially from how you were speaking, the passion and success that you've gained is a credit to you all, and great example for entrepreneurs to follow as they're starting the journey, today. So really wanting to get started. And I know we've got the subject of blockchain and fintech, and I know looking at the history, you guys with the M&As as you've done, the digital strategies, especially the risk management and the regulated stuff. But what I try and cover on the show, guys, is I try and cover a wide sort of range, because I have audiences who are fairly new to these type of subjects, and then we have sort of more experienced and mature. So I try and always start with a bit of a layman's question. So I apologize for the simplicity of it. But for those unsure about the blockchain development and its applications, could you guys just give us an overview at a layman's level of what it is, what it can be used for, and things along that type of line?
Yeah, absolutely. It's at its core, it's an immutable ledger, right? It's a ledger of entries which you can't change the past of. So as soon as you start, as soon as you gain a base level of trust and say, this is the state of things, like this is, this house belongs to Christopher Brown, and that house belongs to Joe Snyder, then every event after that first event doesn't change in the ledger. I don't know if that makes sense. So the first event stays there forever. We can always go back and look at what that first event was on a secured, decentralized trust ledger, so that you could say, Chris Brown owned this house first at the inception of this system that tracks the houses, or whatever other thing you want to put there. And then from there, that house sold to Joe Snyder. From there, that house sold to Mike. That house sold to et cetera, et cetera, et cetera. And that gives you a lot of power going forward, right? I mean, just, this is why I talk about houses here, because it's really easy for people to relate this to real estate. Most people have rented or bought a house, right? Especially people of our age. So it's really easy to see that, this was the process. I had to pay a title company in the US, Arizona. I had to pay a title company to go find out the previous record and do a bunch of research, and their legal department had to pull the zoning laws and the regulations and make sure that the property was correct and that it met all the regulations, and that the county wasn't going to come and, put massive liens against the house because the wall was 4 feet instead of 5 feet away, et cetera, et cetera, et cetera, et cetera, right? There's 1,000 layers of crazy bureaucracy there based upon the fact that you had to write it down on a piece of paper and put it on a filing cabinet. And that filing cabinet may or may not have burned down in the last 40 years.
Yes.
So all that information is mixed up and missing and just a massive pain. So this gives you a system now. This is a digital ledger, right? So you can have it just in one place, but this gives you a system of immutable, trackable record keeping, right? So now you can say, okay, well, these records go back here. We can just print all the records, who owned it when, what piece was where, what goes where, and it's over, right? You've reduced cost and increased efficiency and reduced time to just nothingness in a matter of one technological step. And then if you begin to scale that to just industry and supply lines and oil and gas and just, it explodes.
Absolutely. And, as I said in the intro, a lot of people just think of Bitcoin and blockchain and from there, but it's obviously currently being used in a wider sort of area for smart contracts and things like that. So could you just sort of give us a bit of an overview as well, Chris, obviously, and how you're developing in real estate markets for house titles, land registries, or anything like that? Where else could, the blockchain sort of be used?
All over the place. So, your first example there is, of course, Bitcoin, because the first real use case, the first public known, actual large use case, is creating a cryptocurrency. It's creating a thing that you're going to assign value to and pass around to people because why not? I can do this. So there is that, right? There's that at a base level. You can say, if you actually assign value to these things, and if you actually believe that you can create a currency out of essential bits on computers that are just floating around in the cloud, if you go on to assign value to that thing and enough people do that, then you can have a large decentralized distributed currency. And that's a potentially very powerful thing, which is kind of why there's so much hype over it, right? I mean, there's multiple levels of hype there. There's the hype of that could be amazing, and then the hype of that could be amazing and make money, and then third and fourth and fifth layers where they're just speculating and hoping to make a lot of money.
Yeah, no, absolutely. And obviously, when I went through the books, I was doing quite a bit of research. And as I say, this is pretty basic stuff for you. But, things like the Book of Satoshi, Blockchain Revolution by Don Tapscott and Alex Tapscott, that's the sort of starting points that I got into, we listened to audiobooks, reading the hard copies. And, there's a lot of fear about, will it be used for criminals and illicit reasons. But as I got further and further into the books, it's with the peer-to-peer and the validation with the hashes and things like that, and the reward for keeping the network clean. It is more secure than it is not secure, and it seems to be cleaning that cryptocurrency market, doesn't it?
Well, there's two separate questions there. Sorry. There's two separate uses there, right? There's A, using for nefarious purposes, and B, security. Those are not, those don't go together, right? It can be 100% secure, and the Mexican drug cartels can be using it for all of their transactions. Like, welcome to BBVA, right? So, so go ahead, Joe. Sorry.
Well, I mean, that was pretty much going to be my point. Look, the number one currency used for illicit activities is the U.S. dollar.
U.S. dollar, yeah.
Who knew, right? So the interesting part about that piece of the conversation is that essentially what we're saying in that piece of the conversation is we only want criminals to utilize currencies that we control. Right? That's not actually a conversation about saying how do we stop criminal activity, and then there's a whole other back layer conversation to be had about why is this activity criminalized versus industrialized. So we don't need to get into those arguments today, but absolutely not. you know, that really is a very salient point. Is, you know, the anonymity. Sorry, the anonymity factors that can come from utilizing a distributed ledger cryptocurrency as opposed to a fiat type of a currency have to do with risk factors that existing institutions don't necessarily have infrastructure to mitigate against at the moment.
Yes.
Right. And that's a reality that has transpired through currency differentiation throughout history, right? Going from, you know, trading giant rock wheels. Hey, if you got to trade giant rock wheels for currency, that are very secure, I can tell you that. Right. but it's not very liquid. It's not very mobile, and all the way up through gold standard, silver standard, onto floating exchange. And so, you know, I think that argument plays well in the press. But the fact of the matter is that every currency on Earth is used for good and bad purposes of all kinds. Yeah. And this one happens to allow people to transact potentially larger volumes of value in an easier way with anonymity. And so that can potentially lend itself to that. But, you know, the fact of the matter is that cartels have been burying barrels full of hundreds for 50 years, right? So they're going to find a way.
Yeah, absolutely. And prior to that, I think, what was the U.S. Federal Reserve founded in 1913? And it was gold was the main one before that. And then the Federal Reserve came in, and then obviously the money went from there. So I get that. But I think it's just a point that, you know, obviously I get asked a lot, you know, if is blockchain safe, is cryptocurrency safe, would it be used, would we be tarred with the same brush? And Chris, just on a technical point, you know, how the blocks are stored, obviously about every 10 minutes, is that still current on a technical, or is it getting faster than that now that blocks are, you know, updated and, you know, and validated to the blockchain?
Well, that really depends on what blockchain you're talking about, right? So,
okay.
So let's break this out for just a second to kind of get back to what you were talking about before we went on the whole currency rant for a minute.
Yeah.
Right. So there's a lot of technology that we're talking about. Every time we say blockchain, every time someone come up to you and says Bitcoin and blockchain, they're talking about a full swath of technology that are all these disparate pieces that are currently being developed, right? Yeah. So you have, like, you can launch your own blockchain to your own computer. It sort of defeats the purpose of having a distributed trustless system because it's just you make all the decisions. So let's talk about that for a second. There has to be a way for you to come up with a large-scale distributed trust system where all these disparate pieces come to a consensus that says this is the actual state of data. This is the highest block on the chain. We all agree to that, and we're going to use that as our working base. Yeah. That's called consensus algorithms, and those are an entire group of research on themselves. Right. And when you get into the consensus algorithms is where you get to things like mining Bitcoin. Well, Bitcoin was mined because there's a proof of work algorithm for who gets to say who is the next block on the chain, right? Or what is the next block on the chain, sorry. So if you have these proof of work algorithms, then what is the work you're doing? Well, the work you're doing in the case of Bitcoin and Ethereum and every other cryptocurrency is we're doing the cryptographic hashing of all of the transactions and verifying that block and then putting it on the top of the ledger and then sending it out to everybody else. So whoever did that first wins, right? Whoever did that first, either as a single computer, as a person, or as a pool of thousands and thousands and thousands of people mining together, that group or that person wins the reward for mining, which in this case was Bitcoin. You can move away from that. You don't have to prove the work. Right? It doesn't have to be proven work. It can be distributed, like Ethereum is doing sharding and moving over to proof of stake. Yeah, so you put up some of your Ethereum and you say, I bet that this is the next one, and I verify it using whichever mechanism you choose to. There's some Hyperledger projects that have proof of elapsed time. So you can say every 2 seconds, every 10 seconds, we're going to throw another block on this chain, right?
Yeah.
Now, then you get to how fast are the blockchains? How are you storing this? How much of the chain do you need to be able to say whether or not the next block is valid? And there's multiple options there as well, right? So, you know, let's say you have a blockchain system between 4 banks and you're just tracking credit between members of the banks. This
Yes.
secures the banks from accidentally double, triple lending while someone's, out fishing for multiple loans. This gives a person a better credit line system, depending, if the US wasn't just handing cash to absolutely everybody in the world at the moment, it would be harder to get credit, and you would have to go to multiple banks and tell them your story and show them who you are and do all this. Well, this system centralizes that among a certain set of banks while decentralizing the system and not having to have any single one of them be the actual trust authority, right? They're sharing the trust among them. So if you only have 4 or 5 people, how often do you need a block? Right? How often does a transaction have to happen? Like if these 4 banks are doing, every 5 seconds, and the web page takes an extra second to load, but your infrastructure costs are tiny. So cool. But if it's Bitcoin and you need millions of people across the world who are able to transact in it on a very regular basis, like on an instant basis, well, then you have to keep up with Visa, which is 100,000 transactions a second or something. I don't know the actual number. It's large, right? Because they're not actually transacting it. They're just basically saying whether yes or no and then pretending to move the money, but it actually takes a week to do. So if, Bitcoin was 7 transactions a second, and now with the Lightning Network, you can get 40 or 50,000 transactions a second, something like that. I'm not a super Bitcoin nerd. I don't know a lot about that. I know much more about building actual technologies and blockchains than cryptocurrencies. But there's a huge swath of technology all around this thing. What sort of data center do you need? Why do you need GPUs? Are you going to need ASIC cards or not in the future? Because if we're moving away from proof of work, you don't need to be able to do matrix mathematics on a large scale for just about any other problem, except for 3D graphics. So maybe that's how we get to AR.
Technology.
Yeah, you can still use it, right? But
yeah.
What's that? Sorry.
Sorry, I was saying is that you don't need that mass scale, but you can still use like the open source code, take it down, build your own block. And then, like you said, in those examples of 4 banks, it may be a different scale to, like you said, the bigger scale of the global Bitcoin. So it's the environment it's trading in, I suppose, is the point I'm trying to get to.
Right. Yeah. There's this. Yeah, there's a wide scale environment of just an incredible level of technology that goes into all of these pieces. It's super interesting from my point of view.
Oh, absolutely.
And also that conversation about transactions per second in these different blockchains, and specifically I'll talk about Ethereum because you did bring up smart contracts, right? We as Lannister Holdings, Lannister Development, as a client-facing software development company, our mission, our focus from the client-facing software development angle as opposed to our product internal development angles. Yeah. Those are 2 different sectors of our business. But from the client-facing side, our belief is that blockchain technologies and smart contracts are a better way for transacting enterprise solutions, enterprise contracts, insurance, finance, that it's a better way. The barrier to entry to that being a reality has been transactions per second, right? Yeah. Because you cannot scale out for, let's just get away from real estate for a second and say energy, right? The energy sector has lots and lots and lots of moving infrastructure pieces, moving logistics pieces, moving payments pieces, and a scaled swath of royalty and payments that go out on a continual basis. Those things are done faster, they're done cheaper, they're done more securely, and they're done more transparently with blockchain. The barrier to true enterprise integration and adoption at industry and global scale has been the fact that you need that transactions per second load to be high enough to support the number of transactions that these individual businesses need to do on a moving forward basis. The difference between Ethereum and Bitcoin as a blockchain, the Ethereum virtual machine allows you to run these apps, if you will, on their platform, right? Just like Apple allows you to go in and build an app, Angry Birds, and you can pull the little red bird back and it flies forward.
So it's like
and
an open
green
source
pig.
download.
Right? But that platform is only as good as the amount of apps that it can actually facilitate and the uptime of being able to run those apps in a real world environment. And so that's where we came in at a point in time where we really believe that the technologies have been proved out long enough, and Chris can geek on the data there, but that the technologies have been proved out long enough, and that the infrastructure is now at a critical mass point where the transactions per second actually are starting to elevate to the point where you can put scaled enterprise and scaled transactions of enterprise businesses, services, contracts, logistics, supply chain, royalties, all of these things onto these, and have them have phenomenal uptime, phenomenal response, low cost per transaction, and enough transactions per second inside the system that it can be facilitated.
Yeah, brilliant. Absolutely brilliant. So that moves us on really to the real estate side. And I know that's something close to your heart. Obviously, you've been involved with real estate quite a while. So blockchain and real estate, you touched on it earlier, Joseph. You know, and Chris, you mentioned it about the land registry or the bought the house. You know, in the US especially, and what you guys are doing, just sort of expand how you're using, how Lannister's, you know, entering that and servicing that market.
Sure. So, first of all, it's not just what we're doing. There's a lot of companies, especially here in the U.S. The U.S. has an interesting system, right? The land registry system in the U.S. Is very thorough, which is, unless you're in Puerto Rico, but we're not going to talk about that. So the land registry system in the U.S. is very, very thorough overall. And but it is disparate. It's split. Each county has its own, essentially its own land registry,
right,
and its own tax basis and things like that. I think there's something like 4,000 counties in the country.
Right.
So there's a company out of Menlo Park named Propi, and they have been working on the land registry side and the transaction side. And they actually transacted the first U.S.-based blockchain sale of property 4 or 5 months ago now, and somebody bought and sold a condo, I think in Vermont, on blockchain with Bitcoin. And that transaction was done through Propi working with the county to build the title registry pieces, with Propi working with the buyers and the sellers to facilitate a cryptocurrency transaction throughout that, and so on. What we are looking at is different types of structured real estate investment vehicles and syndicated real estate finance tools that can be done with smart contracts on blockchain for the kind of real estate fintech side of things.
Yes. Yep.
And that those use cases are very, very, very interesting. So there's multiple things that we're looking at, and we're working with. As a matter of fact, we have an announcement tomorrow. So I know this doesn't air today, so I can say that.
It won't go out till next Monday. So Monday, you say.
There we go. Perfect. So we actually have an announcement tomorrow about a strategic partnership with a funding company in Arizona.
Yeah.
We're based in Phoenix, Arizona, both because Cynthia and Chris live there, and also because strategically it's a really interesting place for blockchain. The state of Arizona is very, very tech friendly. Governor Ducey signed a blockchain sandbox law that, among other things, it opens up the state government to working with blockchain companies, and it allows blockchain development and deployment companies like us to deploy fintech and insurtech products in the real world without the full regulatory approval for up to 2 years for up to 10,000 customers. So there's laws there that allow us to deploy, which is really important. Additionally to that, the state of Arizona has a law on the books that allows signatures to be recorded and recognized and enforceable on blockchain.
Right.
So those are two things that are really important. If you want to go to market with a product, you have to be able to actually offer the product to people, and you have to be able to legally enforce the product, right?
Yeah, and they're supporting that launch with, like you say, up to 10,000 customers, not full regulation, and the boosting that economy by, you know, backing, you know, companies like Lannister to get this to market, so which is great news.
That's exactly right. And so that allows us to look at things with our strategic partners and through our alliances and say, what's being securitized right now? What pools of things are being done, and how do blockchains, if we took that, like let's say a master limited partnership, an MLP in the state of Arizona is used to bring in individual accredited investors into a group, and that group to acquire real estate assets. Okay, and so that master limited partnership has a lot of functions. Okay, at the very beginning, its function is a fundraising function and an acquisition function. But as soon as that part of the function is completed, which, by the way, works on smart contracts, or can work on smart contracts, the minute that part of the function is completed, the master limited partnership rolls into a
servicing mode,
right? Yeah, that's exactly right. And so in a servicing mode, the things that matter are what does it cost on a continual basis to service this work, right? So you've got to pay for insurance, you've got to pay for repairs, you've got to pay property taxes, you've got all of these moving pieces of a stationary investment vehicle. And then once all those things are paid and you've collected your rents, you've paid your expenses, then you have to pay dividend to your limited partners, right? Yes. So you have to disperse your funds out. And so all of those things can be built into and written into a smart contract, and that can lower the cost basis of managing the service end of that investment for 20 or 30 years. Yeah. Right? And those savings add up very, very quickly, especially when you're talking about scaled investment.
Yeah, massive. And I think that's one of the other benefits that I was, working with is the speed of processing, and I don't want to go too much back into the cryptocurrency side of it, but, where banks would sit on money for a big period of time, where with, it's going through a lot faster, the cost, and especially, and again, I use the basics that I've picked up just from my research, where people maybe are working in the States or other countries and sending money home, maybe to Central America, it's been cost prohibitive to send that money because of the fees, whereas with cryptocurrencies, a Bitcoin, a blockchain, the speed it can go and the cost of transactions is a lot better. So I'm assuming that's a similar example in the servicing model that Chris has come up with there, or not come up with, but reference there. So obviously it's not only transparent, peer-to-peer, it's totally sort of public ledger to a degree, but the speed that it can be done and the cost savings that can be applied to manage those, like you say, in a scale, it's really going to sort of be very attractive for the investors and the partners alike.
Yeah. Absolutely right. And we were on a show with a guy who was a real estate syndicator, and his retort, if you will, was, well, I have lots of investors giving me lots of money. We do lots of this. Why do I need blockchain? And, my answer was, well, do you want to be Blockbuster or do you want to be Netflix? Yeah. Because investment flows to the most secure, lowest risk, lowest cost, highest return investment in a natural way. That's what capitalism does, right?
It does.
And so if your competitors are all of a sudden offering a product that has all of the same existing regulatory safety and security,
and satisfaction,
all of the existing satisfactions, the very similar returns on investment, in a better, faster, more secure way, it's going to evolve there.
Yeah, and the thing is, it's a moving market, isn't it? Things are moving forward. Change is around us, whether we like it or we don't, it's happening. And I love the example because it's something that we use, the Blockbuster and the Netflix, when we're doing growth strategies and growth engines. Blockbuster had the opportunity to buy a streaming service that turned down because they said, hey, people like to come into the store and choose off the shelf. No, they don't. There's a great quote by Gary Vee. People like to sit on the couch at home in their underpants, click a button and stream download, and that's it. And it's that vision and that ability to sort of say, hey, we want to be a market leader. We want to provide more value. We want to deliver, and drive and force the market because that's where the returns are. And, that's why, no doubt the investors are going to be backing that. Nobody's backing, I'm not saying that radio and TV aren't, still a great medium, but they are certainly declining in their effectiveness over.
No, we can say they're not a great medium. It's okay to say that.
Loads of comments from the TV and the radio guys saying we're still good out there. But the point I'm saying is they're less effective than what they were, and the cost of to get a return is getting higher. And that's the development. So I love that example. So for the listeners out there, if you ever want to get another question to Joseph or Chris, you can use the hashtag #TheOpenMic, and we'll get those either forwarded to Joseph and Chris to get those answered, or we'll get those covered for you with the basic knowledge. But but yeah, drive forward. Doesn't matter whether you're doing basic business model, mergers, acquisitions, you're entering a new vertical, you know, you've got to be at the head of the market. And unfortunately, we were involved with Infusionsoft down at Chandler and you know, but they lost their way a little bit. You know, they didn't develop the product as well. There's new, more agile, what we call speedboat in the harbor models coming out. And, you know, we're a big partner with HubSpot, you know, over in Massachusetts and Boston. And, you know, HubSpot are developing market leading technologies around AI, where Infusionsoft is still trying to get the landing pages that we had in 2010, and they still can't get that right. So they wonder why they slipped off the, you know, the radar a little bit and fell behind. And that's a shame, because I've been involved with Infusionsoft since 2010. But we're probably not going to renew with Infusionsoft next year because they're so far behind the technology curve. You know, companies like HubSpot, you know, obviously they're a floated company as well, and they're investing into new technology, and ultimately, you know, going to market, trying to sell a product or provide a solution that is providing value for your customers. You want to be ahead of it. And whilst there's a little bit of skepticism and risk, does this work? I'm not sure about it. You know, if your product's good, you believe in it, you can certainly overcome those objections. So I'm all for the Netflix over the Blockbuster thing, Joseph. That's a great example. And thanks for sharing. Sure.
Yeah, and also, you know, you're spot on with the reference there, because if you look at what Netflix did around the time that Blockbuster could have bought them, they were mailing DVDs to people's houses. They were very early. The technology to allow people to real-time stream down to their tablets was nascent at the time, right? You couldn't, it wouldn't actually buffer through, you know? And so there is, and we know we are a little bit early to the enterprise deployment of blockchain technologies in the space. We know we're a little bit early. We went to market consciously a little bit early because we wanted to be able to take a consultative approach with these companies who are saying, we believe this might be the way that things go in the future. We believe that this might make things better, but we don't know exactly how it fits. And so,
it's not like a hedge fund. Not quite as bad, you know, it's like hedging out there.
Right. And so we have this, just like what Netflix did, we have a strategy right now where we are networking with partners around real estate finance and these things, where there's real world application and real world profits to be had while we can build technologies for those structures. Also, we are a full stack software development agency, a company, right? We build software for all kinds of things that are not necessarily today blockchain related. And those relationships allow us to go through programs with companies and then say, oh, by the way, hey, this piece right here, that could really be done on a smart contract and it'd be way better, and here's why. You know, and then also have those consultative conversations with very large companies that I can't name today, unfortunately, who are coming to us and saying, hey, we want to understand how this is going to impact our business. Can you guys come in? And then we get to work with them to identify where some test cases may be so that they can begin to play and put their toes in that water and come out with more information and let their executives feel comfortable and their finance guys sign off on things and have, you know, known risk factors to a test bed.
But it's capped risk, isn't it? I think that's the key. It's not like full-blown gambling. It's you know, minimum viable stuff, and you know
that's exactly right.
With the consultative support, then they've sort of got the reassurance that you've got the hand all the way, I suppose, which is really important. That's fantastic. That's
exactly right.
Cool. And I think as we sort of come into the back end of the show here, guys, I've certainly enjoyed it. You know, what you guys are doing at Lannister. And if you want to find out more about these guys, you can head over to lannisterholdings.com or lannisterdevelopments.com, and you can see them at Twitter at LannisterCO or at LannisterDev. But it wouldn't go, or it wouldn't be right if I didn't tap into your entrepreneurial sort of, I don't know, genes and bloodstream, call it what you want. The journey that you've come on, and I know you're going to be humble about this, guys, but I'd really like to just share, you know, entrepreneurship, whether it's small business, medium business, moving into SAP and enterprise stuff, all right at the big end. This, I always find, you know, when I was a solopreneur, a micro business, all the way being to a CEO of a, you know, of a PLC there, I think some of the technologies are still the same. The policies are the same. There's a little bit more regulation, but I think that drive of entrepreneurial spirit is there. And what I'd love you guys to share, both Chris and Joseph, you know, provide the highs and lows of your entrepreneurial journey. What have you enjoyed? for people out there who are maybe giving up, they're thinking, I can't do this anymore, it's too much risk or whatever. I mean, I'm sure you've had the knocks as well, you've been through the school of hard knocks. So I'd just love just to sort of you guys to expand on, the highs and lows, and maybe indicators to success that people can look out for, and just share your journey for a few moments. That'd be great, and I'd really appreciate that adding value.
Chris, I think that's you, man.
Sure. All right. Success is moving from failure to failure without a lack of enthusiasm. That's entrepreneurship.
Do you know what?
Smack you. Yeah.
just hold that, Chris. I'm going to make a note of that and play it back. So success is moving from failure to failure without lack of enthusiasm. We've got a wall of appreciation on the back here. You probably can't see it, the whiteboard's in the way, but we have all the famous quotes from the greats of the old, like Napoleon Hill, to some of the more modern guys. And I'm actually going to put that on. Is that something you credited, Chris, or did you pick that up of somebody else?
When I heard it, it was credited to Winston Churchill.
Yeah.
I looked it up and it was not actually from him. So it's sort of an anonymous sort of internet quote at this point.
I'm going to put it down as Chris Brown. So
all right, that works for me. I'll take it.
There we go.
And when I get that put on the wall, I'm going to take a picture of it and I'm going to post it over for you. So it's there. So that is awesome. Thank you for that. But I'm sorry to cut you off. I just wanted to capture that moment. Success without lack of enthusiasm. And if you listen to nothing else on this podcast, take that down and take encouragement out of it. Back to you, Chris. That's awesome.
Yeah, no, I mean, I've been a computer nerd since I got my first computer at 11, I think, and started writing bots and selling scripts to kids at school, for like just doing terrible things on the internet, basically. I did some computer repair stuff in high school, just my own little business with running Craigslist ads and taking on clients and things like that. And then from there, did university, did the whole mathematics and cryptography career path thing, which apparently led into programming somehow. Like, who knew that was going to happen? And then, I worked at some larger companies as a software developer. And then at the same time, I was still running my own little entrepreneurial side stuff. Joe and I have, as you guys know already, have built some larger companies and exited them and things like that, and later on the path. But essentially, the reality of it is that we always talk about our successes and everything that went right along the way. Like, I did a computer repair business and stuff like that. Like, that sounds great. But there's also 50 other failed ideas right in front of that. And learning to overcome those is really what it takes, right? Every time you get smacked in the face, it sucks to get back up. But every now and then it works, and life is awesome.
Yeah, absolutely. And Chris, for you, red flags, for the listeners out there, people either just getting started or maybe even seasonal guys for 20 years, sometimes they get down in the mouth, or sometimes they miss the obvious, and that can be costly, not just in the financial aspects, but the cost of lost opportunity and getting back on the wagon and moving down the road. Is there any obvious red flags that you've come across in your career where, your gut tells you that that's a red flag, stay away from it? What type of red flags have you come across in this journey?
I'd say a lot of things where you get outside your wheelhouse. So if someone brings me a business idea and it's for something I've never worked in before, like I had a friend who wanted to do a house painting business, and he thought it's fairly simple, right? It's you can get painters out here for, I don't know, whatever it was, $1 a square foot or something. We can charge $1.50 or $2. Let's do this. But it turns out there's a massive nightmare in running paint teams, right? The actual people involved in painting these things, while they're all awesome, great people, they're not the easiest people in the world to manage, especially as a 22-year-old.
Yeah.
Yeah.
I get that.
Right.
So stay within your comfort zone in your wheelhouse is what you're saying there.
Well, stay within your comfort zone. Always, be pushing on the wall. Just know somebody, look for a mentor, find somebody. If you're getting outside of what you know, find somebody who knows what they're talking about and ask them. Yeah. I mean, or just dive in and fail. I mean, it's just kind of fun to learn anyway, so why not?
Absolutely. And A couple of the things I was going to just sort of press you on, and maybe press is a little bit of a harder word, but going through this, the floated with Lannister and things like that, what was the reason to go behind that? Was that just a natural progression because of the fintech and the technology, and that's the credibility? Was it just something that it was always going to be, I talked about Bill McGrath, my non-exec, who was ex-Wix, Barnes Noble, British Gas, FTSE 250 guy, and he always said, never start a business unless you're going to, where you're going to exit it, and things like that. Whether in part full, an AIM flotation in the UK is like a part flotation, part ownership sort of stuff, which gives you the control, but you can raise enough money. So just talk to us about your experience as a floating, the publicly traded business, and why that was such an exciting thing for you.
Sure. So, first of all, I don't know that anybody could fall into the quagmire of having a pubco.
No, that's not true. You could have the nightmare of having one of these things like willed over to you from a distant uncle.
Yeah, and don't hang out with that uncle. So for us, stay away. No, but for us, a couple of things. First of all, Chris and I personally, as much as Chris is somebody who is inspired by and enthralled by technology and that side, I've always been inspired by and enthralled by the entrepreneurship side and the business side and the operation side and scaling. And I've always wanted to take a company public. And I think since I was like 12 years old, and I know that's a really weird goal for a 12-year-old, but I was that kid. So, but what we, first of all, were looking for was a truly scalable blue ocean opportunity, right? Yeah. We, and I say we like I had anything to do with the tech side, I didn't, but we played with lots of different technologies over the last decade, looking at the things that we IoT and, machine learning and blockchains and all these kind of things, some 5G stuff. So looking at those, what we were kind of looking for was the confluence of technology and timing and disruption and application that could go into scaled deployment and enterprise solutions and those types of applications, as well as startups and things like that, but where we weren't, the other guys offering Infusionsoft integrations. Yeah. Right. Yeah. There's a lot of that. Like, you can go get your SAP certification and go bid out county contracts to do SAP integrations and make a great living. Right. Yeah. But you're never going to have a truly scaled opportunity there. And there's not a blue ocean. And so for us, that's what we were really searching for, is the reason to go public with a scaled opportunity. We identified that opportunity around blockchain with IoT, blockchain with swarm robotics, all these kind of interactions or interwoven connections. And then additionally to that, we were looking for the synchronicity between the market timing of the blue ocean and the scalability and the messaging, right? Yeah. You don't want to go to market and be the only guy in the room waving the flag saying, hey, let's talk about this, let's talk about this, let's talk about this.
So you've aligned yourself to something that's already starting to get some global momentum.
That's right. And so when Bitcoin, and again, we're not really crypto guys, we're tech deployment people specifically for enterprise. But when Bitcoin hit 20,000, I called Chris and I said, I think they're going to do it for us. And they did, and they still are, right? The media talks about Bitcoin and blockchain and all these things every single day. Probably half of our entire media strategy is just reposting articles from Forbes and Bloomberg.
And writing,
Right? And content creation around the subject matter. And so that was a really important piece of it for us, to be able to ride a wave instead of try to paddle into shore. From a business strategy. And the structure of a publicly traded company in the US, especially in this market, allows us to stand up and wave a very different color flag. We get to say, look, we're not just crypto. We're not anti-regulation. We're already regulated. We already, have to do filings with the SEC. We already have to talk to FINRA. We already have to comply with OTC markets. So we're coming from the side of saying we believe regulation exists for a reason. We believe that these regulations exist to protect investors and to protect people. And we believe that these technologies work inside these existing regulations, inside these existing structures. And that go-to-market strategy has worked for us so far, which is great. And that blue ocean allows us to have a very powerful message to our stakeholders and say, this is scalable. It's something that, all of these big forecasting companies, IBM says that blockchain development will be 9.7 billion next year. It'll be 60 billion by 2024 in global spend on blockchain systems. That allows us to come to market for our stakeholders and say, this is what we're doing. These are the tools. These are the technologies. And we're one of the only ones doing it this way. And we believe that we can grab this percentage of market share moving forward.
Yeah, absolutely. And you've got a lot of authority there because obviously, especially as a lot of the US investment banks are committing, I think there's a Deloitte report where there was there was 40 million pounds worth of, or dollars worth of investment just by one investment bank just to explore blockchain in the banking sector. Because obviously originally, they were thinking like, hey, if it's decentralized as a currency point of view, how do we get as nose pushed out? Whereas we don't control it anymore, whereas they're already committing to it. So you've got a lot of authority and social proof there in that market within the financial regulations of it. So I think it's a great way. And I love the blue ocean stuff, what Kim and that do. We do it again in our small to medium enterprise. We take them all through, when we like the Citizen M Hotel example and how they forge that, new ideas and just create your own markets. But I do agree that you do need to, dare I say, have not a restrictive fence around it, but those associations, like you've said, for credibility. Because again, I always go back to my career when I was building up, and again, I keep quoting Bill McGraw. It was one of my best. I'd done 2 6-figure exits before I'd done a 7-figure exit, before I even met Bill, and I thought I knew what I was doing. But when I knew Bill, that's what it was. Right. And what Bill always used to say to me is that if you just go fully as a pioneer, usually they end up with arrows in the back because they come over the top and they see all the Indians and have to turn around and they end up with arrows in the back. So he says, getting everybody on side, getting the credibility, getting the associated, nothing wrong with driving and forging the market. And we love blue ocean strategies. And if anybody wants to check that out, they're not quite sure what it is, just go to Blue Ocean Strategy or blueoceanshift.com. And I think you can buy a course online, a few $100s, and you can go through strategy canvases and various other things, which are great examples, even for the smallest businesses, just to sort of
even for the smallest businesses.
Yeah, absolutely. So that's great. And I really appreciate you sharing that with us. And I suppose just finishing off as we wrap up, guys, and I've really enjoyed the time with you guys at Lannister. And again, if you want to find out more about what Chris and Joseph's team's doing, you can check them out at lannisterholdings.com or lannisterdevelopment.com, or check them out at Twitter at Lannister Dev or at Lannister CEO. And these guys certainly are going to give you a great piece of content to sort of build out from there. But before we sort of wrap up, you're not going to get to that public stage. You're not, Chris, from your side, from a tech side, forging those markets, opening those ideas, getting those partnerships, especially enterprise. You're not going to get that without leadership. And again, I know you guys are a bunch of humble guys, but talk to me about what makes great leaders in companies. And is that just a Jim Collins good to great strategy, or is that something that you've crafted or built up over the years and got that secret sauce that you could share with us? What's the secret to leadership?
Humility. Yeah, humility, patience, curiosity.
Curiosity. What about yourself, Chris?
Yeah, being patient is the biggest thing, right? Everybody's human. Everybody has their life going on. You have to find out where they are and what they need and what they're doing and how you can get what you need out of them while fulfilling those other things.
No,
it's
absolutely.
Yeah.
Absolutely. And team building, I suppose I've just got to tap into this. I'm sorry to press you hard, but when I look at the Lannister Holdings site and I look at people like Marissa, we've had some pre-communications with, and obviously the rest of you guys, what's the secret to building that team, getting them on the same page, getting them to buy in? How do you attract?
First of all, there's team building, and then there's Lannister team building, and they're a little bit different because we are a completely remote work organization. Right. We don't have an office anywhere in the world. including in Phoenix. And we built Lannister that way from the very beginning. We didn't build a company and then go, oh, let's let people work remotely. So, Chris and I started working remote through our consulting group about 4 years ago. Yeah. And I won't speak for Chris, I'll only speak for myself. But the hardest part of that was me learning to adapt my management style and my expectations to a fluid working environment that is exclusively results-based. Not, I had to change my understanding of like, hey, it's 9 a.m., why aren't you working? Right? And because that doesn't work. And so what has allowed us to build a really phenomenal world-class team for Lannister has been that pliability, right? People like Marissa's in New Jersey, yep. Right? And I'm in California, Chris is in Phoenix, Townsend Wardlaw, our VP of sales, is in Denver, et cetera, et cetera, et cetera. And so being able to allow people to come in and join us and join the party without moving somewhere, without having to sit down and show up somewhere, and being pliable not just on where they are from a remote work position, but also on when they want to work. As long as you pull your deliverables and you hit your deliverable deadline.
That's what it is. It's the output, isn't it?
It's the output.
Yeah, absolutely. That's a great tip. And I think it's, the stigma of going to work or offering big relocation packages to up sticks and move people across state with the families. People, in the modern world, people are not looking to do that, are they? And they're more hesitant to do it. And I love that because you can basically tap in, as you said, to the best talent, Denver, LA, Phoenix, you can tap into the best talent and as long as they've got their outputs and the results, what a fantastic way to do that. And Chris, have you got anything to add to that? What's your experience, from a tech guy, getting that remote working, getting people used to using, whether it's Zoom or Skype, have you come across many other challenges or pro tips, or is it a pretty easy sell?
Oh, it's a super easy sell. It's the easiest sell in the world. Like, you stay home and write code and I'll pay you. Everybody goes, yes, I'll take 2 of those.
Can I work double shift?
Yeah. Can I work? Can you pay me 24 hours a day? Because I'll pretend to work 24 hours a day.
No.
Yeah. I mean, like Joe said, it's really picking great people who are passionate about what they do and they want to be doing that, right? You can't pay someone to write code for you at their own home with their dog and their wife if they don't like writing code. So at the end of the day, but I think it was easier on my side. The transition for me was actually pretty simple. I had worked remotely previously at an actual software development company. For me, it was easy just bringing in the tools, saying, we're going to communicate by Slack and Zoom and email and Jira, and we're going to, use this type of Scrum, and we're going to use this type of cycle, and we're going to use Agile, and, here's all the systems, put them together. And
absolutely.
That's easy from my end. I think Joe had a harder time because he actually ran the office, right? We had this large risk management business in all these states, and Joe actually went to an office every day and managed the teams and had everybody. And I didn't. I was never there. I lived in another country for a while. But managing my pieces was easy that way because it's technology. Everybody's expected to be on a computer working directly on the computer. So it's simpler from the tech side, but the world is coming together. Everybody wants to work remote. I don't know there's nobody I know who works at a normal job who tells me they don't want my life. Not my life as a Pubco CTO, and nobody wants that. But as a work from home,
Yeah, the work-life balance is really important, isn't it? And like you say, you get to pick and choose.
Right.
No, that's awesome. I really enjoy that because I think, you guys in the States, as I say, we work with HubSpot, we work with companies in Texas, in Austin, we work with obviously Infusionsoft in Arizona, up over in ConvertFlow up in Chicago, quite a few sort of tech-based digital, especially with the agency side. And we get to experience that a lot more, even though in the UK. But some of the UK listeners to the show, they'll be thinking, I don't get that. I got to drive 20 miles down the road. It takes me 50 minutes in a traffic jam. I'm getting all eaten up before I get to the office, and then I've got to do that. And then I've got to do it all the way home again. And it is a great way to work. And credit to you for building that culture. That's awesome. I mean, just before I wrap up, and I suppose I appreciate you sharing your amazing journey at Lannister, and I wish you you every success with it. And we're going to, obviously, not that you need it, guys, but we're going to give you a bit of a plug, and we'll get you published out on social, and we'll be copying it again. If you want to know more about these guys, check out lannisterholdings.com and lannisterdevelopment.com about, you know, how these guys can consult and work with you on blockchain, especially if you're enterprise and you're looking, and even, you know, I take it you're going to work globally as well. You will work internationally, guys, or are you just trying to home base on
Yeah, as a matter of fact, our one of our clients is a UK company. So we're doing a project with a company called Crypto Emporium. They're in the UK. They're an e-commerce, crypto-only e-commerce company based out of London, and they're amazing folks. And yeah, we work all over the globe.
That's brilliant. So lannisterdevelopment.com, Lannister Holdings, or at Lannister CEO on Twitter, or at Lannister Dev. That's where you're going to get these guys. And I take it if anybody shoots you some questions on there, you can get those answered for them as well.
Absolutely.
So, as I say, it's been I can't thank you enough for the serious value that you two guys have added. Chris, your technology side and that considered approach is just so refreshing, and you know, you hear so many texts just making it complicated. I've really enjoyed the simplicity, but the value has been awesome out of it. Joseph, you know, that other side of driving that business, and I know Chris plays a big part of that as well. I don't want to undermine that, but the different sort of angles, I can see why you two complement each other so well, and you've been so successful. And thanks for adding all the serious value you've done today. And just as I wrap here, if people are thinking about fintech, they're thinking about blockchain, and I know I might put you on the spot here, but is there 3 tips that you'd ask them to think about before approaching like a fintech or a blockchain company? What would they have to get clear in the head? Is there like 3 pro tips you could say before you come to somebody like Lannister? You know, have these 3 things in your head, or whatever. Is there anything you could just sort of summarize as 3 quick pro tips that make it easier for you to work with companies, and, you know, for you to help them?
Well, one pro tip is anytime you have a if and then contract scenario within your organization, a smart contract or blockchain solution can probably do that better. But blockchain is not going to comb your hair in the morning. So those are my pro tips, Chris.
Yeah, you know, have some semblance of a working idea of where it is that your piece fits, right? I mean, this is coming from the tech side. If you're coming to me and saying, hey, I want to build this piece of technology, have a decent idea of why you want to build that and what it solves, right? Now, if you just have a problem and you say, I want to know if we can solve this using these technologies, cool, I will have that conversation with you 100%. But don't come to me and tell me that it fits this way and it does this thing when it doesn't.
and also, you know, one pro tip is this: if it already works really well, like on the cloud, and it works really well, and it's doing its job very cheaply and affordably, you may not need a blockchain. Yeah.
So, and that's an honest consultative play. It's about getting results for people as opposed to just making another sale ticket, isn't it? And from there,
that's exactly right.
That's fantastic, guys. As I say, I've really enjoyed it. I'm not quite sure where we are with time. My computer's on full screen, so I'm not sure, but I don't think we're a million miles off. So, guys, as I say, thank you very much indeed. I've sincerely appreciated it. We're going to get this recording out early next week, so plenty to go there. And again, last plug, guys, if you want to check these guys out at Lannister Holdings or Lannister Dev, or at Lannister Dev on Twitter, you know, or Lannister CEO, Joseph and Chris will help you there. Thanks for being on the show. We've sincerely appreciated it, and thank you for sharing your expertise, your knowledge, and your amazing sort of journey with not only the UK audience but our international listeners as well. It's been fantastic. So thanks again, guys. I really appreciate your time, your expertise, and how much time you've given us today. It's greatly appreciated. Thank you.
Thank you, Mike. I really appreciate you having us on. It was fantastic.
It's an absolute pleasure.
It was a good
Thanks
time.
again, guys. I really appreciate it.
You have been listening to The Open Mic, brought to you by The Success Hub. To find out more and to get the resources we have mentioned in this podcast episode, simply visit blog.thesuccesshub.io and view the podcast section. Thanks for listening, and we look forward to catching up with you in our next episode. This podcast and associated materials is published under copyright to The Success Hub. All rights reserved. No reproduction of this material is permitted.